to Better Banking, a monthly program designed to give you a better understanding of your finances and how to improve the ways you manage your money. I'm Walt Lasco, sitting in for Paul Gentile. Better Banking is presented by the Credit Unions of Rhode Island, and for them and all credit unions, October is a very special month because October 19th is International Credit Union Day. And so, to mark the observance, Better Banking wants to give you an overview of how credit unions were formed in the United States. We'll take you to America's Credit Union Museum in Manchester, New Hampshire, where we will learn about the start of credit unions and the value they bring to the financial services marketplace. We'll also talk with a noted expert on cooperatives, what they are and how they differ from the for-profit business models which most of us are familiar with. And why, you might ask? Because to really understand credit unions, you need to know what a cooperative is, since credit unions are financial cooperatives. Finally, we'll visit Rhode Island Credit Union to learn about home equity loans, what they are and how they work. So let's begin with a tour of America's Credit Union Museum.
Hello, welcome to Manchester, New Hampshire, and welcome to America's Credit Union Museum. My name is Stephanie Smith, and I am the Executive Director here at America's Credit Union Museum. In 1908, mill workers from the west side of Manchester worked in the mills in downtown Manchester and didn't have access to appropriate banking institutions. The parish priest next door, Monsignor Heavey, recognized that there was a need for his parishioners to have access to secure financial solutions. He partnered with attorney Joseph Boivin and Desjardins from Canada to create the first credit union here in Manchester, New Hampshire. The first credit union, Le Caisse Populaire, opened its doors in November of 1908. The original charter for St. Mary's Bank was signed in April of 1909. It was here in this space in 1908 the first credit union was started. Monsignor Pierre Heavey, pastor of St. Marie's Church, had seen cooperatives in his travels and felt that they would be a viable solution for his parishioners, most of whom who had emigrated from Canada, seeking a better life for themselves and their families. Although they had their own stores and church, there was no financial institution located on this side of the river, the West Side, which was also known as Little Canada at the time. There was no place where they could save their money and access loans at a reasonable rate. The banks, which were located in downtown Manchester, catered to the mill owners and had no interest in doing business with the mill workers. Most of the mill workers spoke only French, which created a language barrier and an issue of trust with the banks that only spoke English. The credit union was housed in this building for the first 5 years, and America's Credit Union Museum is the national museum for the credit union movement. It is amazing to see that what began as an alternative to other financial institutions for a small group of people has evolved into an industry that is now approximately 6,000 credit unions and over 100 million members strong. One of the museum's missions is to not only preserve early credit union history, but to also chronicle the history as credit unions continue to write it in the years to come. This exhibit speaks to the need to create financial institutions during the Great Depression. In 1931, over 1,000 banks folded up and closed their doors. During that same time, credit unions, which started with 1,000 credit unions, tripled their existence. 5 years later, there were more than 3 times as many credit unions. Much of this is attributed to Ed Filene, who is considered the father of credit unions. Not only did he start credit unions, but he helped the movement move from Manchester, New Hampshire, and New England across the country. The figures of Ed Filene and Roy Bergegren are life-size. Mr. Filene may not have been a man of tall stature, but he was a powerful advocate for the average working man. He believed so strongly that credit unions were a viable solution for the average working man that he invested $1 million of his own money for the expansion of credit unions across the country. In June of 1934, Franklin Roosevelt signed Senate Bill 1639, which enabled the creation of credit unions in every state in the country. There, 2 months later, Delegates from every state came together in Estes Park, Colorado, to write the Constitution for what would become the Credit Union National Association, or CUNA. Credit unions also have a global presence. In 1954, it was Roy Bergengrun's vision to create a global presence for credit unions across the world. Out of that desire, CUNA has created the World Council of Credit Unions. World Council of Credit Unions helps to bring the credit union movement to other countries, to establish financial options for citizens, as well as helping to rebuild after natural disasters. Thank you for visiting us here at America's Credit Union Museum today. We welcome you to stop by our museum in Manchester, New Hampshire to learn more about the credit union movement across the United States. You may also visit us online at www.acummuseum.org.
Values make a big difference, especially in the business of banking. And that's one of the primary reasons why credit unions stand apart. Credit union values are built in the cooperative business model. That's why they're democratically controlled by their members and why they can offer better rates and yields. It also explains why they give back to the community, hosting financial education fairs or supporting local charities. Credit union values make a difference.
Howard Brodsky is chairman and co-CEO of CCA Global Partners, one of the largest cooperatives in the United States. And did you know his co-op is located right here in New England, in Manchester, New Hampshire? Howard is an authority on cooperatives, and he joined me at the museum to share some of his knowledge and insights on why cooperatives might be viewed as capitalism with a conscience. Howard, welcome to America's Credit Union Museum. Thank you for being with us this morning.
Well, it's a pleasure to be here with you.
You know, let's start off talking about cooperatives, and I guess the basic question would be, tell us, what is a cooperative?
A cooperative is an organization that's owned by its members. So instead of a typical corporation that's owned by private shareholders that might be in a different country even, cooperative is owned by its members for the benefit of its members.
Mm-hmm. Yeah, quite a different model from shareholders. You know, everything being done in a company for the shareholders is done really for the members.
Yes, and the members own the organization. So the values are aligned, totally aligned. It's probably one of the best forms of capitalism there is. I always say cooperatives are capitalism with a conscience.
There you go, with the qualities, exactly. Right. So tell us, when were cooperatives founded?
Benjamin Franklin founded the first one in the United States as a mutual insurance company, but the cooperatives that we sort of look at as our contemporary today was founded in England in the 1800s by the Rochdales.
Ah, there we go. So there is it's a long history to it. It's not like cooperatives are something new. They've been around for quite some time, which to me would demonstrate there must be some success to them.
They've been around a long time. They've also proved to be much more sustainable than regular businesses. Cooperatives stay in business much longer. It's almost like 200% longer than a private corporation. And probably because, again, the values are aligned. Mm-hmm. There's member participation. It's not where everything is driven by the bottom line that's going to a third party.
Mm-hmm. So, as we know, because credit unions are a financial cooperative, so they're part of the cooperative family.
Right.
And I guess when you talk about how the cooperatives are formed and how they're driven, it really comes down to principles. And there's 7 business principles. Give us a little example of what those principles are.
Yeah, probably the ones that are most relevant, and I say they're all relevant, and it's probably the only form of organization that's guided by principles. Certainly private corporations and one's public operations are not guided by any principles. So it's open membership, means, you know, it's open for people to come in and participate. Economic participation. The member has an economic role in the organization. Mm-hmm. There's also an enormous care for community. It's part of the principles of a cooperative. So, you know, what happens locally, what happens in the community is a basic part of what drives a cooperative.
And I think what's also so nice too, when you think about it, is that as a member of a cooperative, you also have a vote in the governance.
Absolutely. So you have a vote for how it's run, you have a vote for the board of directors, and you know, the members are really what drives a cooperative, and that's what makes the values aligned.
You know, I just mentioned that you know, credit unions are a financial cooperative, part of that cooperative family.
Right.
Give us an idea of, you know, what are some other cooperatives? You know, where are they involved, and tell us a little bit
Sure.
about them.
Well, they're in almost every segment of our life, and I think that's what people don't realize. So there are purchasing cooperatives. So Ace Hardware of the world is a purchasing cooperative. Carpet One is a purchasing cooperative. So there are many, many purchasing cooperatives of very large size. There are farmer cooperatives, Land O'Lakes, Ocean Spray, very large farmer cooperatives. People don't even think of that. But then there's rural electric cooperatives that serve over 43 million people in our country. There are housing cooperatives. So they touch base of almost every single segment of our society in a way that is very, very positive. As I said, because the values, when a cooperative is concerned, they're concerned about the members, and the members own the cooperative.
Yeah, it's obviously a totally different model than what
Right.
I think a lot of people are used to. And I think it's, as you say, a lot of folks don't realize that they're surrounded by cooperatives. They're right next door. It's not like these are
Right.
some type of foreign operatives. I guess it's as you say, it's another way of doing business than, you know, the capitalist making
Right.
money for the shareholders. But it's doing business with a conscience, as you say, and with the values and the principles.
Yes, and also for a lot of small businesses, so there's two types. There's consumer-owned cooperatives, which are credit unions, and food cooperatives. There's business-owned cooperatives, which would be in the farm segment, but also in the segment we're in. We have bike stores, and we have lighting stores, and child care centers. But it's a way for them to have scale, maintain their family business, but have the same scale of buying and merchandising and marketing that the big chains have. And we have proven that a cooperative business can stay in business longer and serve their customers much, much better, and still maintain that family local practice that they do.
And it's so important. And I think that's what so many people are looking for, something like that today too. You know?
They really are, and I don't think they realize that cooperatives can really be a contemporary model. Matter of fact, there's a whole movement what they call platform cooperatives. And a platform cooperative is like Uber is owned by a private organization, but it's really an app with hundreds of thousands of drivers. Well, Uber should be owned by the drivers. Well, they do all the work.
That's
and
right.
so there's a big movement to have all these what they call platforms owned by the people that use them, which makes much more sense than third parties.
Exactly, and they're the ones using it. They're the ones who should have a say in how it's run.
Right. Exactly.
You know, you started an initiative that's called Cooperatives for a Better World. Tell us a little bit about what you had hoped that initiative to achieve.
Sure. What we found was, as much as cooperatives are doing so much good for so many people, that most people don't understand cooperatives, that the awareness was really very, very small among all segments. And millennials, when they understand it, love it. But we found when people understood what a cooperative was, the approval was amazing that people would switch to business with a cooperative. And Cooperative Better World is really to make cooperatives better, the awareness at a much higher level, and also connect cooperatives to each other. Because cooperatives all work on the same principles, and yet they're working independently. And by working with each other, they even provide more scale and more benefit for the community.
That's correct. That's correct. So the program, Cooperatives for a Better World, recently got underway?
Yes. So the initiative started a little over 2 years ago, and we're now building co-op communities. We're going to build them all across the United States in order to provide better benefits for consumers in the community, better benefits for the employees, and as I said, more awareness. You know, in the United States, there's over 130 million members of cooperatives. And worldwide, there's 1 billion members. People don't realize the scale. 100 million employees of cooperatives in the world.
So, and that's what's so important, because as we mark International Credit Union Day, and we talk about credit unions being financial cooperatives, I'm so glad that you're able to be with us today, because you head up one of the largest cooperatives in the country. And to have you with us today to talk about what cooperatives are, I think is very important for our audience, so that they could get a deeper understanding of the depth and the scope of what cooperatives are and what they do.
Yeah, and because I think they really align with most people's personal goals of wanting more for the community, wanting more socially conscious, having a sustainable business, and local businesses. I don't think the world wants Amazon and Walmart to own every single thing in the world.
Right.
You know, the local family businesses are an inherent part of our American way. And so credit unions and the food co-ops and Ace Hardware stores and the farmers are a vital part of America. And what co-ops do is they keep those organizations thriving.
Yeah. And I think it's important so that the next time folks go to the local food co-op and they see the credit union down the street, they have to realize that credit union is a co-op just like the food co-op is a co-op. It's all the same
Absolutely.
family. Before I let you go, one last question. I guess from your personal perspective, your personal opinion, why should consumers do business with cooperatives? How is it, in your opinion, that cooperatives offer a better choice?
Well, by the nature of cooperatives, it's combining organizations of business to bring scale. So number one, they'll get value. Number two, I think they get honesty and there's a consciousness behind it of caring about the customer, because the values are more concerned about the customer than it is about the bottom line. They're profitable, they're entrepreneurial, but they have values that are much greater than any private organization could ever have.
Wonderful. Howard, thank you so much for being with us today.
Thank
Appreciate
you.
it very much.
It's nice being with you.
Family's important to me, and when I come to the credit union, they always know exactly what I need. It's like one-step shopping. You just come here and they know what your needs are. And the credit union, I feel like this is where I'm taken care of. Do you remember that show, Cheers, where everyone knows your name and you feel real comfortable in talking with them? That's what credit union is for me.
Home equity loans are primarily used to finance major expenses such as home repairs, medical bills, or college education. They are determined by the value of the property you own, and the value of the property is determined by an appraiser from the lending institution. Here's Maureen Jenzek of Rhode Island Credit Union to give us an overview of home equity loans and how they work.
Welcome to our presentation on home equity loans. What is a home equity loan? A home equity loan is a type of loan in which the borrower uses the equity in their home as collateral. What are some of the common uses for a home equity loan? Some people like to remodel their home. They could possibly purchase a second home, consolidate high-interest credit cards, use the money for college education for their children. There's any number of purposes that a home equity loan can be used for. How do I know how much equity is in my home? The equity in your home is the portion you actually own versus the amount that you owe to a lender. If your home is valued at $250,000 and you owe $200,000 on your mortgage, you have about $50,000 equity in your home. So what does the loan to value mean? The loan to value is a ratio of the balance on your home loan compared to what the value of your property is. So if your home is valued at the $250,000 and you owe $200,000 on your mortgage, the loan to value is at 80%. So you may not have any available equity at that time to be able to borrow. However, there are other products out there through the Member Close program where you can borrow up to 100% of the equity in your home. The interest may be higher, but you'll be able to get the money for what your purpose is needed. Why is the loan to value important? Generally speaking, lenders will allow an 80% loan to value ratio, meaning you cannot borrow more than 80% of the value of your home. If your home is valued at $250,000 and you owe $150,000 on your first mortgage, you would typically be able to borrow about $50,000 on the equity in your home. As I mentioned, there are some exceptions to the maximum loan to value, so you would have to check with your lender. Types of equity loans. There are generally two types of equity loans. There's what we call a fixed rate equity loan and then an open-end line of credit. The fixed rate equity loan is usually for a specific term and you borrow a specific amount of money over that term. Most of the time, those interest rates are fixed. The equity line of credit, there are two types of equity lines of credit. There's an interest-only program, and then there is a program where you would make principal and interest payments. Both still work the same way, where you can re-borrow the amount that you have available on your line. Most of the time, those interest rates are adjustable on the equity lines of credit. Some of them may have an annual fee, or they could have an early termination fee as well. Principal and interest payments. Once the line is established, you can borrow as much as you need at any time that you need it by writing a check or using a credit card that is connected with the account. For a home equity line of credit where there are principal and interest payments, you immediately begin making payments after the first draw, and there is no specific draw or repayment period. On some types of interest-only lines of credit, there is a specific draw period. It's normally about 10 years, and then it usually goes into a 15-year repayment period. And monthly payments are based on the amount that you have outstanding, not your total line. What documentation is typically required to apply for a home equity loan? This differs among lenders, but the common documents that are needed is a current pay stub, your last couple of years of W-2s. If you're self-employed, we may need your last 2 years' tax returns, the full tax returns, a homeowner's policy, and a recent real estate tax bill. And this just shows that your taxes are current and your home is insured. Are there costs involved with obtaining an equity loan? Costs will differ between lenders. Some lenders will not charge for a title or an appraisal, and there are no closing costs. All lenders are required to provide a loan estimate which outlines the fees, and that you would get upon your initiation of asking questions about an equity loan. Is the interest tax deductible? So one of the advantages of a home equity loan is that the interest may be tax deductible, the same as you have the deductibility on a first mortgage loan. However, you would need to check with a tax advisor to determine your eligibility. And how do you find the best home equity loan? Well, you need to do your homework, shop around, compare interest rates, closing costs, if there are any appraisal fees or title fees. Determine which type of loan best suits your needs, and be prepared. Have the documents ready. Know your credit score when you actually go in and see your lender. And I am very passionate about credit unions, so I would suggest you go see your local credit union. And I would like to thank you for taking the time to listen to this presentation.
Rhode Island Credit Union, proudly serving its members since 1946. At Rhode Island Credit Union, we are not accountable to stockholders, we are accountable to you, our members. We are committed to providing affordable products delivered by a knowledgeable and friendly staff. We know our members and understand their financial needs, and we are dedicated to serving all of those needs. Rhode Island Credit Union, more than just banking.
We're more than just banking, Rhode Island Credit Union.
In our final segment of today's program, we'll hear from Bob DeSilva, president of Alliance Blackstone Valley Federal Credit Union. Bob will share background on his credit union and the financial value it brings to its members. Here's Credit Union Spotlight.
Alliance Blackstone Valley Federal Credit Union is located at 594 Central Avenue in Pawtucket. We have 3,000 members, and we are a $34 million operation. We originally started to serve the teachers of the Pawtucket school system. Then we branched out to all the school department workers. We received our community charter back in 2004, so now we serve the County of Providence, to exclude a couple of municipalities like Woonsocket, Smithfield, and Gloucester, but we cover the rest of the county. We offer a full suite of lending and deposit products. On the lending side, unsecured consumer, auto loans, mortgage products, and equity products as well. On the deposit side, we offer a full range of deposit products. We do have a unique product that's unique to the credit union here at Alliance. It's called the Summer Fund. Again, as I mentioned, because we were a teachers credit union, we wanted to assist them for budgeting for the summer months. So we created a fund. It's a high yield fund. It pays a little bit more than a normal savings account. They're able to put money away on a regular basis during the school year to help them with the summer months when they're not working. It was originally designed for the teachers and school department workers, but it's open to all the members. Education is very important. We like to educate our members. We like to educate them on how to save, how to invest, the importance of their credit scores. We actually take that whole program and we put it into the high schools. We go around to the local high schools and we teach them the life experiences that they're going to be experiencing fairly soon. Again, how to establish credit, how to save and invest, how to purchase a vehicle, how to maintain a good credit score, and how to use credit wisely. Those are the things that they're going to be facing right off the bat, so we want to make sure that they're prepared for that. So those are the types of things that we do. As far as inside the credit union, most of our education usually comes in when a member is sitting, across from a member service representative and they don't qualify for a loan. We do offer counseling on how to improve their credit score, how to make sure that it stays good so they can get the credit that they need for their needs. Education is important because there's a lot of folks out there that aren't savvy enough to know what products are available to them. So we want to make sure that we reach out to the whole community to understand, again, the importance of credit and what it means to you. I mean, nowadays, they're going to pull credit when you apply for a job or when you want to get auto insurance or homeowners insurance. So it's not just getting credit. The credit score is much more important these days. So those are the types of things that we want to make sure we educate our members on. One of the other things that we do, we just instituted a Pay It Forward program. A couple months ago, we went to the car wash across the street and we offered to pay for people's car washes. We promoted it with a car wash and we were there for a couple hours and paid for everyone to get their car washed. And we simply handed them a card with the credit union's information. We put a little product on there that was specific, and on the back of the card was the Pay It Forward logo, and all we did was ask them to perform a random act of kindness. It was great promotion for the car wash, great promotion for the credit union as well, and we look to do that in the future.
And that's the October edition of Better Banking. Hopefully, we're leaving you with a bit of new information or knowledge that will prove to be of value in the way you manage your finances. But before we bid farewell, we invite you to take a minute to tell us what you think by sharing your comments with us. Our email address is betterbanking@ccua.org. For all the credit unions throughout the Ocean State, I'm Walt Laskos, wishing you and your family a better banking experience. See you next month on Better Banking.